And I'd describe that strategy best to say that we are sector agnostic value investors. So that means that we are able to look across the whole of the commercial property universe to find value throughout cycles.
Hello, you're watching Proactive. I'm joined by AEW UK REIT PLC portfolio manager Laura Elkin. Laura, very good to speak with you today. You've delivered a 2% NAV total return this quarter and paid your 41st consecutive dividend. What's been the biggest driver of that consistency in a still subdued property market?
Hi, Stephen. Thanks very much for having me this morning. Thank you for recognising that recent performance that we've announced. I'm really going to point to our strategy, and it's the same strategy that we've been running at AEW for the past 11 years now. Strategy that really plays to the strengths of our teams as stock pickers and as asset managers. And I'd describe that strategy best to say that we are sector agnostic value investors. So that means that we are able to look across the whole of the commercial property universe to find value throughout cycles. And we do a lot of counter-cyclical buying through the property subsectors. So being diversified there is really key to that strategy.
This quarter broke a long run of valuation gains, Laura. Where are you still cautious and where do you see genuine upside?
Yeah, you're right. It did. So this quarter, we had previously had 11 quarters of consistent valuation uplift. I would point out, though, that we made a profitable sale during the quarter, which I think accounted for more than we lost in value. So still some good capital profit during the quarter. But I have to say, the way that our strategy is set up is that we always look at our acquisition prices to try and make them as defensive as we possibly can. Due to the kind of defensive buying that's built into the strategy, we see upside potentially over the short, medium, and long term on most of the assets in our portfolio, and we are always pursuing that with our in-house asset management team. I'd say an area that I'm probably most cautious on is offices, but that has for quite some time now represented a very small weighting within our portfolio.
Retail warehousing stood out, especially the B&Q Regear at Barnstaple. What does that deal tell us about where rental growth still exists in UK property?
Yeah, for us, it's all about using that kind of active asset management that, again, is sort of so key to our strategy, using that asset management to find that rental growth. In a diversified strategy, that's really what we've kind of got to do to really intensively asset manage our portfolio, and it has really resulted in that continued valuation uplift across 11 quarters that we touched on in the previous question, and how that's reflected on our income as well. We have grown income consistently for the last 3 years. And looking at the current year as well, that also looks to be moving towards a really strong outcome. So asset management is a key driver for that. In our portfolio at the moment, we also have about a 37% weighting to industrials. And for me, that's a really key area where our reversionary yield in the portfolio is significantly higher than our initial yield. I would say that we have that across the whole of the portfolio, which we do, but particularly in the industrials, and that is a key area of rental growth that we're pursuing going forward.
Laura, you mentioned that sale. Of course, you sold a vacant office in Hitchin for more than double book value. You now have fresh capital to deploy. How selective are you being when it comes to new acquisitions?
Yeah, so actually that sale in Hitchin was relatively small. It's only 1 million. So it doesn't free up a significant amount of capital for us at the moment to redeploy. But that said, we do undertake active and quite intensive recycling of the portfolio when we feel that an asset has maximised its capital value and we've pushed the income stream as far as we can, then that asset is likely to be ripe for sale. Now, in buying new assets, we are very selective on what we're buying. When we are targeting high income, we always have to make sure we're doing that to make sure that income stream is sustainable. We see an awful lot of assets to buy offering high income, and not a lot where we believe it really is sustainable, or where we can acquire them for a low enough capital value to build in those defensive characteristics that I was talking about. Now, having said that we sort of buy very selectively, which we do, at the same time as that, though, and at the current time, we also see a lot of opportunity in our pipeline. So we are finding that the market at the moment is offering us almost the most attractive pipeline, the most well-priced pipeline that we have seen since our IPO.
Laura, a 7.4% yield looks compelling, but how confident are you that this level of income is sustainable through the cycle?
Well, having just sort of described that we buy that income very selectively, we do that homework on our acquisitions to really make sure that we have looked into that, to make sure it's as sustainable as it possibly can be. And I think that's reflected in our track record. We've got the most stable dividend across the UK diversified REITs. We also, with our board, employ quite a unique dividend policy at AEWU, where our board have committed and displayed to the market that they are willing to pay our dividend not just through property income, but also using the capital profit that intensive recycling of asset creates. So, of course, that's not returning of investors' capital. That is simply just using that sort of really reliable source of capital profit that we've seen over the course of the past 11 years, and that we see coming through in our business plans on a forward-looking basis as well, and using that to create that very stable dividend.
If investors check back in a year, what needs to have gone right for AEW UK REIT to look meaningfully stronger?
So at the moment, we would very much like to grow the company, and that is to provide greater liquidity in our shares, to reduce our cost base, to really just enable new entrants to the register to appreciate from our performance, which has been very strong. So we're looking at ways with our board to achieve that at the moment. For me, that very much, and for the board as well, that goes very much hand in hand with maintaining our strong performance, though. So I would say it would be for the company to grow, but also to make sure that we are, of course, looking after the best interests of our current shareholders, keeping our dividend high, keeping our performance strong, and also our share rating, which has been, again, one of the strongest in the sector, to have that maintained as well.
Well, Laura, I hope you'll keep us updated with your progress. Thank you very much for your time today.
No problem. Thank you very much.
Laura Elkin is Portfolio Manager at AEW UK REIT PLC.